It's Tuesday the 8th, I'm FX Plu and this is CurrencyTransfer.com's market update. So the main headlines today are that the MPC meets this week, unlikely to affect the fortunes of sterling. Trump's at it again with the Iranian nuclear deal and the euro is closing in on a key support level. If you cast your mind back a couple of weeks, you'll remember that sterling was riding high and it was all but assured that the MPC would raise interest rates at their May meeting. A few things collaborated to change the sentiment and shift sterling significantly lower. Carney initially issued some cautionary comments to kick things off. Then there was a string of weaker than expected UK data. And then finally the Brexit concerns piled in to all but withdraw any support a May rate hike may have had. It was a UK bank holiday yesterday and so there was thinner trading conditions, but cable touched a low of 134.85 and we even saw 113.08 against the euro, although that has rallied back towards 114 overnight. The risk appetite has been a key driver of the dollar rally. You'll see that the dollar index is currently around the 93 mark. It may struggle to break any higher at the moment though, because the trade talks in China, which was one of the positive sentiment drivers behind the rally, they may have stalled. And then further, Trump has waded in to the nuclear issue, prompting Iranian leaders to warn of consequences should the US actually pull out of the nuclear agreement that was signed by Obama. Trump is due to announce his decision on this at 6 p.m. this evening UK time, so we may have a little bit more clarity on that before the end of the day. But current US dollar sentiment is still pretty strong. It may be that it's the best of a bad bunch of the major currencies right now. But on Friday, the non-farm payrolls came out weaker than expected. The headline reading was 164. I obviously lost the sweepstake, but wage inflation was also weaker than expected. It came in at 2.6% instead of the 3% forecast. So logically, that may well have softened expectations of a June rate hike in the US, but it seems to have done very little to alter perception on the dollar, as the immediate reaction on Friday was fairly limited. Meanwhile, over in the continent, the euro is not in great shape right now. You know, the single currency is very weak. It's actually fallen by 5.25% since the mid-February highs. Euro dollar has broken the 119 level now as well. We touched 118.97. And Charlie on the chart says that the market sees a fairly firm line in the sand at around 118.80, very close to where we are right now. And the threat is that if that's broken, it may accelerate the decline of the euro and roll in a new period of sustained weakness for the single currency. Definitely one to keep an eye on there. We will, of course, keep you posted throughout the day. If you have any questions, pop them into the comments below. See you tomorrow.